Yo, what is going on YouTube? I am Germ here. As you guys can see up on the screen, today I wanted to talk a little bit about Aterian Incorporated. This is ticker symbol ATER. And you can also see right here, we're talking about them today because they are down 33% in a single day. That is crazy. I mean, for anyone that had it, I feel bad. That sucks. I can't, that just sucks. Because the stock market, it's not like the stock market's crashing or anything. The SPY is down 0.01% or something like that today. So for a day that the stock market overall is pretty flat, to be down 33%, that is crazy. But that's obviously going to turn a lot of heads. It's going to get people curious. What made a company go down 33% in a single day? Obviously, you can see up here, Q2 earnings call is what happened. The results came out, and obviously the market did not like what they saw. So in this video today, we're going to be going over what this earnings report said, what has made the stock drop so far, and kind of what to do from here. What's next for ATER. So yeah, definitely drop a like if you guys do enjoy this video. I would appreciate it so much, and subscribe to stay up to date on all my latest content. We recently just passed 850 subscribers. Absolutely crazy. But we're trying to get to 1,000, and we're getting there slowly but surely. With your guys' help, we can get there a little bit faster. I would appreciate it a ton. With that being said, here we go. So it's been a tough couple of months for ATER, for anyone holding ATER. Look at this 6-month graph. Down 87.25%, and from these highs of around 47.66, they are down 88.47%, over 88%. Of this company has just crashed and crashed and crashed since February. Now, in February, there were a ton of small market cap stocks that were going crazy. That was like, penny stock mania really peaked in February. December, January, February, all these kinds of companies were going crazy, and a lot of them have crashed back down. A lot of them are down 30, 40, 50% from February. But I have not seen too many down 87%. This stock is now sitting at a $182 million market cap. Very, very small. But just think back here, it was almost 10 times the size. It was almost at $1 billion market cap. And to think that it's 200 million, it was over $1 billion. To think that it's now under 200 million, that's crazy. It's tough. And what we're looking at today is why Aterian stock plunged on Monday. This is from the Motley Fool from Fool.com. Key points is that management is seeing high uncertainty in the near term as the business wrestles with rising inflation and freight costs in the supply chain. This is obviously something that a lot of businesses are dealing with. Shipping costs, supply costs, everything like this is rising on people fast. Some businesses and some sectors and some industries, that's actually benefiting. There's certain people that are making money off that stuff. But for most businesses, most industries, most sectors, these rising shipping costs, these increased costs of just, doing business, supply chains, all that stuff is really hitting them hard, especially at a time where a lot of companies were booming over COVID, insane growth, year over year, putting up insane numbers. Now stuff started to stunt a little bit. Some of that growth has slowed down. Some of that growth is honestly reversed for some companies. And then you're throwing on these extra costs and inflation on top of them. Some companies are really beginning to struggle, and that's why you're seeing 88, 87% drops in companies like ATER. They reported second quarter earnings results that came out on Monday. The stock was down 38% as the time they were writing this. The stock had climbed 192% during 2020. Demand for their products was up. Kitchen appliances, household goods. People are staying at home more. People have some stimulus money. People are collecting unemployment checks. They're buying a little bit nicer stuff. They're stuck at home 24 hours a day. They want to have some nice stuff. They want to have some nice appliances. They want to have a cool kitchen. They have some money for those extra, renovations or whatever that they've always been thinking about doing, but they've never had the money for, or never had the time for. But now it's 2021. It's August. They're facing new obstacles with tough year-over-year growth comparisons and rising shipping costs that are pressuring profitability. Stock is down 71% year to date, and trailing the Nasdaq with its return of 15.2%. On the surface, the Q2 results don't look too bad. Revenue grew 14% year over year to $68 million. Gross margins ticked up to 48% from 46.2%. However, analysts were expecting revenue of $94 million and adjusted earnings before interest, taxes, depreciation, and EBI DTA of $3.3 million, but they reported a loss of $3.7 million compared to a gain of $3.4 million in Q2 of 2020, just exactly 1 year ago. The CEO did say that this has been a challenging quarter for e-commerce marked by a global supply chain crisis, inflation, and an extreme shift in consumer behavior due to the opening of brick and mortar stores after the relaxation of COVID-related restrictions. We are seeing more people are vaccinated, more people are getting out, more people are doing more stuff. The e-commerce section has really taken a hit. And again, when you're doing a lot of online business, shipping costs, supply costs, everything going up, that is hitting your bottom line. They went from making money to now losing money. It is affecting their profitability, even though revenue has increased, even though gross margins have increased. So that is a very, very scary sign. And obviously, the stock market is scared. Investors have been worried. This stock, it opened at $5.16, and intraday it has ticked up a little bit. I mean, from the open to here, we're up 6%. But the fact that we're up 6% and still down 33% on the day, that is very, very worrisome. Now, I don't know when things are going to get better because, the world is opening up more and more. This company is going to have to come back down to earth, just like so many companies that boomed during COVID. They had high expectations. They saw insane growth, and then people started pricing in that growth into the future, and that's not how the world is now. The world is changing. We are slowly and slowly getting back to normal. The world is opening up. Even if Delta variant or whatever comes back and ravages some people, we're never going back to that early 2020 or even the mid 2020 when stuff was going crazy. So a company like Aterian, they're going to find a bottom eventually. Again, they're down to 87%. Eventually they'll hit a bottom and they'll start ticking back up. But man, right now things are getting ugly. Things are getting rough. And they're dropping fast. But that is why, at least, now you guys know what is going on and can make a decision of whether you're buying the dip, whether you're staying away, or what your plan is. But pretty much every video today, guys. Definitely drop a like if you did enjoy it. I'd appreciate it so much. Leave a comment down below. What do you think about Ater? I'd love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hopefully catch you guys in the next one. But until then, peace.